Good afternoon. Good afternoon. Welcome, everyone. It's Monday, the 11th of December, and welcome to our latest Market Mondays edition. I'm Thilan Wickramasinghe, Head of Research for Maybank in Singapore. So last week, we did see the big tech names still rallying quite hard, keeping the S&P going higher, while actually the ASEAN markets also saw some positive traction as well. So across the markets, we will get to the market performance in a bit, but that's what we're going to discuss today. So the first up, we have a head of regional research who's asked a lot of the analysts around the region to show their faith and conviction and pick three stocks for the next 3 to 6 months. The results are in, and we will have Anand talking us through this in a little while. Then we go to Malaysia, where our banks analyst Desmond is standing by to explain why he's still positive on the Malaysian banks. And finally, we come to Singapore. The Economist called Singapore the most expensive place to live in 2003. And we all feel it. But apart from that, there is one stock that actually might be benefiting from that. So we're going to be talking about that as well. But first, let's go to the market movers. Across last week, we did see some big positive moves. We saw the Dow Jones up about 0.4%. The S&P is also up around that much. The Shanghai Composite was up about 0.1%. So a lot of general positiveness around the markets with the whole soft landing and peak rate sort of narrative. And then when we come to Southeast Asia as well, we got the STI, which had a pretty good week last week, up about 1.2%. The Thailand as well, playing a bit of catch up about 0.2%. KLCI was a little bit weaker, down about 0.1%. We did see Bitcoin continuing to rise, so there is still very much risk on. Bitcoin closing at about close to about $45,000, so up about 2.7% just last week. And oil still relatively stable, but Brent up about 2.4%. Now, with that, let's move on to our stock picks. So here I want to bring Anand in, who's our regional head of research. Now, Anand, you recently asked the 40 plus analysts in the region who covered around 320 stocks to put their faith and conviction on display. And they've all come up with, 3 top picks for each of the markets. So, but before, Anand, we go into these stock picks, were there any notable regional themes or issues that were highlighted from these results?
Yeah, hi, morning, Thilan, morning, everyone. So I think, generally the backdrop or the sentiments amongst our heads of research in all the 6 countries are quite positive. If you look at our index targets for end 2024, 12 months down the road from now, the upsides range from 12% all the way up to 30% for Vietnam. So, we are definitely bullish. And the context is that next year we are seeing a pickup in GDP growth across all the ASEAN countries. I think for ASEAN as a whole, our macro team has said GDP growth is forecast to accelerate to 4.7% next year compared to 4% in 2023. And also, at the same time, all the markets are looking cheap on a historical basis. Most are trading at 1 standard deviation or below compared to their historical means. And then you have some other thematics. So for those thematics, I think 3 to 4 are worth flagging that have sort of influenced the top 3 picks for each market. One is, we do expect rates to have peaked and start to come down in 2024. And that's going to be quite stimulative across the board for all the ASEAN economies. Definitely more room for monetary easing. That's going to boost consumption. So consumption is a big thematic for many of the countries, especially in Indonesia and the Philippines, where you have very big consumption-driven economies. So stocks like Indofood, SM Investments feature. Also in Thailand, stocks like Home Product Center, and in Vietnam, Mobile World in the consumption space among the big caps. And also REITs in Singapore. I'm sure you flagged to clients that stocks like CICT in our top 3 picks in Singapore because of the potential, not just the potential for rates coming off, but for a lot of other fundamental reasons as well. So that's the first thematic. Second, China growth. We don't expect a massive acceleration in Chinese growth in 2024 because there's quite a lot of fundamental issues with the economy. But economic stabilization would be sufficient to support sentiment in ASEAN and ASEAN equities. Third would be the semicon cycle turning. So I think this is more a sort of a Singapore, Malaysia specific sort of play. So stocks like Franken, one of your top picks, Venture, also Inari, Great Tech in Malaysia would be stocks we would like. And finally, I think the fourth thematic, sustainability, no getting away from this, especially with COP28 just winding up. Green investing, renewables, green mobility. So stocks like ComfortDelGro, another pick in Singapore, Gulf, a pick in Thailand, and SolarVest in Malaysia would be worth looking at.
Great. So multiple themes playing out in the region, while the region is actually quite cheap as well. So rates peaking, China stabilizing, semicon cycle coming back, and sustainability as well. So there's a lot of opportunities in the region. Anand, one of the markets that kind of disappointed quite a bit this year, and there was a lot of hope that this market, after elections and things like that, will turn around, was Thailand, which has underperformed massively. How are you kind of thinking about this, and what are some of the top picks to be positioned as we go into next year?
Yeah, no, it was a difficult year for Thailand. The SET was the worst performing benchmark in ASEAN, down about 17% in local currency terms, and almost 20% in US dollar terms. So, we had the elections, and there was a lot of uncertainty in the wake of the elections in terms of the formation of a government, and all that sort of played into the underperformance. Now, 2024, as I mentioned, generally better on the GDP front. We're looking at an acceleration from 2.4% to mid 3%. And that's coming from better income growth, especially among the farmers, agriculture sector, recovery in exports. And of course, for Thailand, recovery in tourism, that's going to be a big driver as well. We also expect the new government to focus on stimulus. So a lot of handouts, which will be quite good for consumption. So I think when you ask me, the sectors we're focused on in Thailand, based on our head of research Chuck's feedback, one big one is, as I mentioned before, consumption. So stocks like home product centers, CPO, should play into the stronger GDP and more government stimulus through handouts. So consumption is definitely a big focus for next year. The other is energy. So the energy sector is seeing a lot of expansion. So our top pick there is a stock called Bangchak. It's into refining, it's into service stations as well. And crucially, it's into renewables. So its renewables capacity is set to double over the next 3 years. So I think that's the other sector where we're quite overweight on. And if you want to be a bit more defensive, you still think Thailand's going to be quite a challenging market, but you still want to be weighted. I would say the banks are a good place to be. Stocks like KTB, Kasikorn, Bangkok Bank, and also telcos like True would be your defensive picks.
Right. Actually, we have our analyst Vasu, who actually just initiated on InTouch as well, a telco holding company with a buy. I'll highlight that a little bit later on in the show, but that's something to watch out for as well. Now, thanks, Anna. Let's kind of move to some of the more developed ASEAN markets, Singapore and Malaysia. How are you thinking about these markets?
Yeah, I think, Malaysia and Singapore, quite distinct drivers. For Malaysia, I think it's going to be very much execution on policy sort of driven. I say this because in 2023, especially the second half, we had a whole slew of economic blueprints and roadmaps being released by the Malaysian government, the NETR, Energy Transition Framework, a roadmap, the new industrial master plan. So there are many focus areas for the economy and geographies as well. So a big push into renewables, also certain states like Penang seeing a big infrastructure upgrade. Johor will try to leverage a lot more on its relationship or proximity to Singapore in areas like renewables and economic zones. So a lot of policies to play with. We just need execution on these policies. But I think the sectors you want to be focused on, outside the usual sort of value plays like banks and telcos, would be things like renewables. So stocks like YTL Power, which was a star performer this year, SolarVest as well. Infrastructure, stocks like Gamuda, IGM, which are going to be big beneficiaries of increased infrastructure development, especially in states like Penang. And also property stocks like SP Setia, CIMB Properties, which have big land banks in both Penang and Johor, which will be the two sort of epicenters of development in 2024. I think Singapore, I'm really going to quote your work in terms of the thematic developments that could drive share price performance. So one is the accelerated adoption of Gen AI. I think you've already mentioned this before. It's going to impact a whole slew of sectors. But perhaps one big one, especially for the Singapore market, is banks, in terms of cost efficiencies, middle back office. Something like DBS would benefit from that. Also, the telco space, ST is something we would flag in Singapore. The second thematic, AUM and supply chain relocation from China. That's going to be a broad benefit again for the economy. But I kind of like the semicon companies you flagged here. Franken Venture, I think from the supply chain relocation perspective, should benefit. And finally, for Singapore, I think local companies expanding regionally. I mean, Singaporean companies have been doing this for a while, but I think right now, in terms of valuations regionally, very attractive for Singaporean companies to expand, especially given the currency factor. So stocks like Raffles Medical, Sembcorp Industries, ComfortDelGro as well, to a certain extent, should be focused on. To finish off, I think one common theme Malaysia and Singapore have for 2024 is tourism. I think we're both sort of looking forward to a greater momentum on the tourism side. So I think Genting Group is something we share as countries. So you're getting Singapore, we've got Genting Malaysia. And also for Malaysia, I think Capital A would be a good play.
Excellent. So, I mean, there's a lot of stock mentions here. So, audience, I'd highly recommend that you download the weekly newsletter from the QR code or from the app, so that you can really go through all that. Anand, before I let you go, just one last question. Since we're doing this tour around ASEAN, is there any other market that you think is worth giving a shout out for? Any other market that's really standing out for you?
Yeah, I think the two we didn't cover was Indonesia and Vietnam. I don't think we expect too much from Indonesia this year. It's been a relatively stable performer over the last year and a bit. Singapore, Malaysia, and Philippines, we've all gone through our elections in the last 18 months. Sorry, not Singapore, but Malaysia, Thailand, and Philippines, we've all gone through our elections in the last 18 months. Indonesia is coming up February next year. We don't expect any major changes in economic policies or focus, whoever wins the elections. So it's going to be more of the same. And I think if you want to be in Indonesia, stick to the basics, banks, things like BCA, Mandiri, looking very dominant and continue to grow very well. Property like Ciputra would be a good exposure. Something like infrastructure like cement Indonesia. So very basic industries, but with still lots of growth potential in a very stable economic environment. The other country, which is frankly everyone's favorite for a very long time, is Vietnam. Can be very volatile, but we see great things ahead. It's still a frontier market, but it could graduate to an emerging market in the next 18 to 24 months. That means a lot more capital coming in. So you could pretty much invest in any sector there and be fairly confident of good returns. I would flag a couple of stocks. Techcombank in the banking sector is #1 private bank in Vietnam, doing extremely well. Mobile World in the retail space, #1 retailer in Vietnam. Hopart in industrials, and Vinhomes in the property sector would be good stocks to look at.
Brilliant. Thanks, Anand. There you have it. So many ideas, so many themes to play going into ASEAN next year, and valuations are cheap as well. So looking for exciting 2024 ahead. Thanks for joining, Anand.
You're welcome. Thank you for having me.
Now, staying with the theme, Anand mentioned that one of the sectors that is a value sector is the Malaysian banks. So I'm going to bring in Desmond, Malaysian banks analyst here. Now, if you recall, we've been fairly neutral on the Singapore banks for a while now because of peaking interest rates and so on. Desmond, on the other hand, thinks this is not so for the Malaysian banks. He's kept his positive rating on the sector following third quarter results. So, Desmond, what was third quarter like for the Malaysian banks?
Yeah, hi, Dylan. So the third quarter was actually a decent result season for the banks as a whole. At the operating profit level, the 9-month operating profit was flat year on year, given that the banks actually saw a sizable NIM compression during this period of about 26 basis points year to date. But the 9-month core pre-tax profit rose 8% due to lower provisions, and net profit jumped 18% in the absence of Cukai Makmur. For the year itself and for the banks within our coverage, we're looking at cumulative net profit growth of about 12%.
Okay, so pretty decent. So, what are some of the key themes that are playing out for the sector, do you think, in 2024?
Yeah, so as you mentioned, we're actually positive on the sector, and this is for several reasons. Firstly, if you look at Malaysia from an economic perspective, we expect GDP growth to grow at a faster rate of 4.4% next year, versus about 3.9% itself this year. So the pickup is expected to come predominantly from the corporate sector itself. Secondly, the thing is, should interest rates start to fall in the US, we expect regional rates to decline in tandem. But for Malaysian interest rates to remain stable, because the gap between the overnight policy rate and the federal fund rate is the widest since 2005 at over 200 basis points. So there is less of a reason to actually cut rates domestically. And from a currency perspective as well, we think that the ringgit is close to a trough against the US dollar and should start to strengthen somewhat next year. And this should hopefully drive some of the foreign interest back in. From an operational point of view, we expect the margins to stabilize after the heavy contraction in 2023 and for credit costs to generally improve still. And so we're looking at cumulative earnings growth of about 6% for the stocks in our coverage. Also, if you look at dividend yields, they're quite decent across the banks, averaging about 5% currently. At the top end, we have Maybank at about 7%, and we have RHB at about 6%. And finally, as well, we have valuations that are pretty decent, with the sector trading at a forward PE of just about 9 times, which is lower than even -1 standard deviation to mean over the historical period of about 10 times. In fact, if you take a look, the MCO low was about 8 times, and we're kind of close to that, which is kind of unjustified given that earnings growth has actually resumed for the sector.
All right. So cheap valuations, decent yields, potential of the currency strengthening. So quite a few things going for it. So can you talk us through some of your top picks, Desmond?
Yeah, so I'll just highlight 3. The first one is CIMB. The CIMB currently trades at a prospective FY24 price to book of 0.9 times, which we think is relatively low for prospective ROEs of about 10% this year itself. The group targets a higher ROE of about 11.5 to 12% for FY24, which should they be able to achieve should contribute to further re-rating of the stock. And the dividend yields are pretty decent at about 5.9% currently. The next stock is actually Public Bank, which has seen much foreign selling this year, but we think that its foreign shareholding is bottoming out. The fundamentals of the bank are undoubtedly still very strong, with strong asset quality, high levels of provisioning, and ROEs of about 13%, which are the highest in the industry itself. Dividend yields currently are about 4.5%. And finally, AMMB, a mid-cap stock, which was hard hit by its 2.8 billion 1MDB global settlement in 2011, which impacted their capital ratios, and their CET1 ratio fell below 11%. It has since clawed its way back, and its CET1 ratio is expected to hit about 13% by the end of March next year. What is positive about this is that it should allow the bank's payout ratios to normalize higher, and the yields are currently 4.5% and could improve further. Moreover, the stock currently trades at a CY24 price to book of just 0.7 times for ROEs of about 9%, which we feel is too low of a valuation. So those will be the top 3 at this point in time.
Great. So CIMB, Public Bank, and AMMB. So please do have a look at Desmond's more detailed note on our newsletter this week. Thanks, Desmond. Thanks for joining us.
Thank you.
Now, The Economist has named Singapore as the world's most expensive city. Most of us who live here, we know it and we feel it. Rental costs are soaring and other expenses are also quite high. So one of the options that are becoming more and more attractive is actually co-living. And it's becoming a more and more affordable option. Jia Lin, our property analyst, she's keeping a buy on LHN, which is one of the cheapest co-living operators in Singapore, one of the largest and co-living operators in Singapore. Yes, the third quarter results were a bit of a disappointment, but this was mostly due to interest costs and not really operations. So in fact, if you actually look at the core living revenues, they actually came in ahead of forecast, and that's actually set to grow even faster going into next year. The group is working on reducing their overall leverage ratios. They're selling non-core assets. Plus, if we do expect interest rates to start reducing or coming off next year, that will also ease some of the pressure as well. Valuations are extremely cheap, just 6 times next year's earnings, 0.6 times book, and has a 6% dividend yield as well. Jia Lin has a target price of 45 cents, which has about a 45% upside from current prices. So do have a look at LHN. The stocks come off a bit, so this might be an interesting entry point at this stage. Now we're running out of time, so let me quickly go into the upcoming dates. We have a very busy week of data coming out next week. We've got so many major central banks coming up with their rate decisions from the Fed, Bank of England, the ECB, and also a slew of data on inflation, Nodex, industrial production, and so on and so forth. So you'll find all that data and the dates in the newsletter. A couple of events I want to highlight. We've got on the 13th of December, Vietnam's bank sector deep dive. One of Anand earlier highlighted Vietnam as one of the key markets to look at in Southeast Asia. So please do speak to your salesperson for an invitation. And we also have an Indonesian telecom sector deep dive as well on the 14th of December. And again, it's one of the key sort of markets within Southeast Asia. So do join those calls. Now, before I go, maybe I'll take one quick question. We have an audience question here. What can we expect the FOMC from the FOMC meeting this week? And what are the implications for the Singapore market? Well, I think in general, we're expecting overall policy rates to hold. The last hike we saw from the Fed was back in July. And the tight sort of monetary policy and the tight sort of credit environment seems to be doing the job. It's actually starting to bring down inflation. But the job is not done yet. And I think that's a key thing to take note of here. Inflation is nowhere close to the 2% sort of target that the FOMC has set. So I think one of the tone and the wording from the FOMC meeting, we think will be more directed towards taming sort of market rate cut expectations. Markets already pricing in about 5 cuts for next year, and and March being the as soon as March being the first sort of cut. So that you may see some wording around how in terms of taming some of those expectations. In terms of for Singapore, obviously the most rate sensitive sectors are the REITs and the banks. And I think for the banks, the fact that rates will remain elevated, but without any cuts is kind of positive, because that will continue to support NIMs. And also for the REITs as well, given the fact that it gives some reassurance that rates have peaked as well. So that, a couple of sectors to kind of watch out for. unfortunately, that's all the time that we have for today. So thank you very much for joining us again. Next week, 18th of December, will be our final show for the year before we go on break. So please do join in, and we will have some very special guests on the show as well. And until then, have a profitable trading week and have a good week. Thank you.